All right, Matt, the mortgage guy, with a special guest today, Jesse Brecht from My Credit Guy. We're going to do credit myths debunked. So in this video, I'm going to go through 8 credit myths, and I'm going to ask the expert to debunk these for me, because these are things you probably have heard and you might even believe. They're just not true. Stay tuned. All right, we're back. We got the expert Jesse Brecht from My Credit Guy. Thanks for joining today, Jesse. I appreciate you, brother.
Yeah, you bet, Matt. Thanks for having me, man. I appreciate this.
Yeah, and I mean, I see enough credit reports where I feel like, in certain respects, I might have a working knowledge of credit, but like literally all day, every day, you're talking to people about their credit, you're digging into credit reports, you know credit, and your whole team at My Credit Guy knows credit really well. So I'm happy to have you on and talk about some of these myths. Let's jump right in. Here's credit myth number 1. Your credit score is the same regardless of what you are applying for.
Ooh, one of the biggest. This is one of the biggest myths, and I know that you probably see this a lot, right? Like, and here's why it's not true. There are so many different credit scores, and when I got into credit, one of the things that I thought is it's not really even fair to ask somebody what is your credit score, because there's never a correct answer, right? Even on a mortgage report, there's 3 separate scores that are built on 3 separate algorithms, right? So that's the word that we really need to play into, is algorithms or models, right? So FICO specifically is a company that most lenders will use as that risk assessment, right? But even they have 34, 38, 40 plus different models that are built specifically because they're a product for a company that's using it to assess risk. So there's different scores for credit cards, for automobiles, for mortgage, for anything, right? And then on top of it, we've got another company that's made their way into the credit scoring game called Vantage Scoring Solutions. And that's where we get into really the biggest difference in scores that we see most common is a Vantage 3.0 score that's on the market right now, because that's more of a consumer. So when you're on the consumer end of things, right, like when you use your credit sesames, your credit karmas, you're going to either be seeing a Vantage 3.0 score or a FICO 8. Those are consumer scores, and they don't tie to anything as it relates to lending.
Right. Yeah. So that's what I get, as you can guess, right? Is like, oh, my Credit Karma score says this, or, I just got my credit pulled when I applied for this credit card. Different types of credit, different algorithms, different risk models, different score.
Absolutely. Yeah.
All right,
The terminology that I use a lot, our analogy would be like, there's different classes in school and there's different grading systems, right? It really is to that level of detail with credit scores.
All right. Credit myth number 2. Checking your report will hurt your score.
No, it won't. Checking your report will actually help your score because you'll be knowledgeable of what's happening on your credit. So what this comes from is, like, there's this big misconception out there that credit inquiries are like the number one reason that credit scores get suppressed. And it's just not true. I mean, even to the point of when it's time to buy a house, you have to pull credit in order to understand what your opportunities are. And I run into those a lot as well. We even have a video that's like, stop keeping your lender from pulling credit. It has to happen, right?
Yeah. I mean, and it cost me on my side $100. The cost of credit scores has gone up. We pay for it, and yet people are like, no, last time somebody pulled my credit, my score went down by 60 points. I'm guessing it probably had to do with 3 missed payments or, maxing out one of your cards, but
for sure,
neither here nor there. That's another myth debunked. All right. Credit myth number 3, closing a credit card will help your score.
So where this comes from is a large financial advisor in the United States is saying, cut up your credit cards, close your accounts, right? And the problem is that even though that might lead you towards making better financial decisions of how you spend, which I would agree with, right? Like, credit cards are to be used responsibly. When you close a credit card account, and any account in general, it takes away the length and or the time and the history that you've established that is needed to build good credit. So whenever you close an account, it removes that history from your scoring algorithm, the scoring model, and your score is going to go down almost every time. Now, if you had a credit card that was open for 2 months and you've got five other cards that have been open for 10 years, it's not going to. Your average age probably goes up, right? But it's very uncommon for things like that to happen. Just don't close accounts.
Yeah, I don't want to pick on Dave Ramsey, but you're not going to get very good terms on your mortgage if you have no credit score. I'll leave it at that. Credit myth number 4, better job, better income equals better credit score, right?
So, no, not at all. Honestly, it takes maybe $400 for 2 secured credit cards and 6, 8, 10 weeks to establish good credit, right? Like it doesn't matter how much. There's so much about the credit scoring algorithm that is based on a percentage of what you use and utilize compared to how much is open, right? So if you're under 10% utilized on your credit cards, which is like the best category you could be in, right? And you have $1,000 trade line and you're spending less than $100, that is just as valuable than somebody that has less than $10,000 on a $100,000 credit card, right? It's all kind of a ratio.
Right.
So,
right.
Although I would say having access to a whole bunch of income could help you probably quickly fix your credit, right? Like it's not needed at all to have good credit.
Right. Yeah, I've seen people who make $1 million a year with 490 credit, so doesn't translate. Okay. Yeah. Credit myth number 5: credit score accounts for demographics.
Absolutely.
Race, national origin, religion, profession, that all weighs in, right?
No, bad credit transcends all of that. I promise you, right? Like, I spend a lot of time looking at credit reports and specifically with the lens of like, how do I improve this? And age, race, where you're located, how much money you make, it doesn't matter at all.
Okay.
It's all behavior.
All right, cool. So this one, I'm going to give a personal example, but credit myth number 6: your credit score measures your value as a person.
Yeah, no way. Thank goodness.
Yeah, well, that's that. I was going to share a personal story because I think this is like something important for people to hear. Like, good people have trying times, and when people come to me and they're like, they feel bad or they had a missed payment or a bankruptcy or foreclosure and they're like embarrassed of it, like it happens to the best of us, right?
Yeah.
My credit score is now 790, but it wasn't after I filed Chapter 13 bankruptcy. It wasn't after I let my mortgage payment get 9 months behind because I was trying to modify it when my wife was in the hospital with our first son. And so we've all had challenges. It doesn't mean that you're any less of a person. It just means that like your score is going to reflect late payments. Your score is going to reflect, hey, I went through a bankruptcy, and that's a higher risk to the credit agencies, and therefore like the terms you get on debt is going to be affected by that. But I wanted to give my personal example on that one, that it doesn't measure your value as a person. So don't be embarrassed about any credit challenges, because it's something that can be fixed. Ultimately, is the best part. Yeah,
and I'll expand on that a little bit, because I would say like there's a lot of people that are overwhelmed even to like make that phone call to say what happens next, right? And that is maybe, if it is the hardest, that's fine, but like it has to be made, because that's when the change can take place. And I will tell you that even with all of that resistance and hesitation that most people have to talk, it's my job to make them feel comfortable that they are not alone. Like, so many people out there that have challenges with credit, but once you understand what's obtainable and how much time and work, like usually it's not as unsurmountable as people think to make changes that are going to be very, very beneficial for their future. Yeah, for sure. All right. Credit myth number 7: you need perfect credit to buy a house. So only the 800 credit scores and above are buying houses, I'm sure, right? Yeah, this you get to debunk this one. Right. Yeah. And that's the thing too, is like me and you talked a little bit offline where you said, some people think that their credit is terrible, and then we run it and they've got a 660. And then I can tell them, great news, at 660, you can get a great looking loan with FHA and put 3.5% down and be in that home. If your credit score improves, if you gain equity in the house, there's always a chance to refinance into even better terms. But there's companies that down to 580, you're still putting 3.5% down with an FHA loan, and even lower than that at times. So
you said it because you see a lot of credit reports, and I'll say it because I see a lot of credit reports too. I've got people that are dead set. I've got perfect credit, no problems. And then we pull it and it's 615. And then on the other end, I've got people that are like, oh my gosh, I've neglected it. My credit's not so good. I know I've got a bunch of debt outstanding, and you pull it and you're like 704. So you're looking good, right?
Yeah.
And so don't one, think that you need perfect credit to buy a house, and two, don't assume that your credit is bad. Ultimately, you have to run it to find out.
Absolutely. And I think when it comes to buying a home, like being prepared puts you in such a better, situation. So instead of worrying about all of these things, I think get with somebody like Matt that's professional, that you can relate to, that you can trust, to help like create the roadmap. If there are barriers, it's better to like see them on the front end and be able to address them. But I mean, I absolutely see so many people that think I need to get perfect credit. Like, this is my goal before I go talk to somebody about how to outline a plan. It's like, no, because if you're ready to buy now, that would be fantastic, right?
Yeah. You're going to be in just as much trouble as if you listen to that guy DR and you try to save up 50% to buy a house 17 years from now, right? When houses cost double what they cost today. Yeah. All right. Credit myth number 8, the last one. There's a bunch of gurus out there, Jesse. And so I'm sure there's a bunch of companies that have magic wands and they can fix your credit.
So here's the thing. A credit company, even ours, can help you fix your credit. But there's no way you're going to click a button, enroll in service, and pay, and we're just going to wave a magic wand and make things happen. And that is one way that our team separates ourselves from all the other negative connotation that's in our space for credit repair. We are human driven, right? We are coaching, educating, and teaching people how to do the things that they need to and understand. Now we're directing you, right? Like, we're going to do a lot of work for you. Absolutely. But at the end of the day, like, you're the one that has to do the work to fix your credit, the majority of it, right? And it's almost to the point where we're going to be serving as more of a consultant and a person that comes along your side to help you, right? Like, if you have to make a debt settlement call, you'll be on that call. We'll be with you. We'll be leading it. But nobody's just going to fix your credit. That's for sure.
Yeah. Thanks, man. I love it. This is all good stuff. I'm going to have links down below. If anybody's got questions on, just a free assessment of their credit, which I know you guys do. And, I've been a champion of my credit guy for years. In my profession as a mortgage professional, that's all you guys do is prepare people to buy houses, right? And that's your main focus is how do we, serve consumers at a high level, advise people so that they can do whatever needs to happen between where they're at now and getting ready to buy a house. So Thanks again, Jesse. I appreciate you, brother.
Thank you, Matt. I appreciate you having me, man.
All right. Thanks, brother. Bye-bye.